Live from London, this is Bloomberg Daybreak Europe. I'm Lizzie Burden with your top stories. Stocks drift as markets brace for the US payrolls report and a possible Supreme Court ruling crucial to President Trump's tariff policy. Meanwhile, Rio Tinto and Glencore get back to the coalface, resuming talks to create what would become the world's biggest mining company. Plus, Donald Trump signals the US military could strike drug cartels on Venezuelan territory, as he also looks to firm up his grip on the country's oil industry. A happy Friday, everybody. I hate to break it to you, but there's a lot of risk before the weekend. This is how markets are looking at the moment. Futures pointing higher just on both sides of the Atlantic. The 10-year Treasury yield at 4.17. But all of that could change because take a look at the risk events on the docket for today. Two big ones. We have the non-farm payrolls report coming out of the US, and we could potentially get this tariffs ruling from the Supreme Court later. The justice is sitting on the bench from 3 p.m. London time, and it's an opinion day, so maybe we get a decision. We're also going to get the German industrial production numbers at the top of the hour, but those set to be lackluster. Let's get you ready for the working day. Well, it could be an especially volatile day for the markets today as we await a pivotal US jobs report and a potential Supreme Court ruling on President Donald Trump's tariffs. The jobs report, the first since the government shutdown, will hopefully provide a reliable reading on how the economy is faring. Speaking to Bloomberg, Fed Governor Stephen Miron says he's looking for 150 basis points of interest rate cuts from the Fed this year in order to boost the labour market.
I'm unsurprisingly the lowest Dodd. I'm looking for about 1.5 points of cuts. A lot of that is driven by my view of inflation. I gave a speech about this about a month ago in December at Columbia University. My view is that almost all of the excess inflation over target is due to quirks of how we calculate inflation.
Let's bring in Bloomberg's Valerie Titel for more. Val, where could the jobs ruling and the jobs report and the tariff ruling leave the market today?
Yeah, there's a lot going on today. I think with non-farm payrolls, the really key thing here to watch is for an unexpected drop in the unemployment rate. It is expected to tick down from 4.6% to 4.5%. But if we go into the 4.4 territory, you're going to have the markets really starting to doubt that this labor market weakening is going to be a continuing theme into 2025. Perhaps I could point to a narrative shift in the market that the weakening trend of the labor market is behind us and the market could continue to price out Fed cuts for 2026, as opposed to what Stephen Miron told us yesterday, that he still wants that 150 basis points of cuts. If we see the labor market switching to a more strengthening position, that could really start to doubt whether we do need further Fed easing this year. On the tariff front, it is important to note that what Polymarket, what the betting odds are showing us right now is that tariffs are likely to be overturned. So take that into consideration when you view how the markets are likely to react. Perhaps we've already priced in IEEPA being overruled by the Supreme Court. But I think the general consensus out there is the market is going to trade it like a tax cut, essentially. It's going to be positive for corporate margins, so positive for the equity market in the time being, and it could be negative for the Treasury market, essentially, because this is something that could add more worries over the deficit, and we have to start thinking about whether the tariff income has to be paid back. But that is still a big question. We could see the Supreme Court, strike down IEEPA, but then not necessarily declare that the revenue has to be paid back. That could be a decision they could push back to lower courts. The decision will have a lot of nuance. And then the other big thing to watch is how quickly Trump will react off the back of that to implement placeholder tariffs in the meantime.
I'm sure no one expects Donald Trump to have no plan B here. So, yes, we'll dive into what that could be later in the show. But, Val, we've already got markets reacting to the president saying that he's going to target housing costs.
Yeah, this is interesting. The president posting on Truth Social that he has instructed Fannie and Freddie Mae to buy $200 billion worth of mortgage bonds. I think this is telling us two things. The Trump administration is really targeting affordability ahead of the midterms, almost at the detriment of the U.S. deficit. And it's also just telling us that Trump has had more willingness to intervene directly into the day-to-day functioning of business. Now, off the back of this, we did see mortgage bonds rallying, but we saw an even bigger move in home lender stocks. The likes of Loan Depot surged 18% in post-market, even Rocket Mortgage surging 7%. But the market impact really unsure. Fannie and Freddie Mae have already been buying mortgage bonds in the last few months. They do have the ability to do so. And we had an estimate from Citibank saying buying of around 200 billion of these bonds could lower mortgage rates by 25 basis points.
Yeah, the president definitely starting 2026 on an interventionist footing. Bloomberg's Valerie Titel there. Thank you so much for walking us through all those market reactions. Well, it's already been a choppy session in Asia as we await that US jobs data. Let's get to Winnie Xu in Hong Kong now for more. Winnie, what are you watching?
Good morning, Lizzie. Happy Friday. Now we're seeing MSCI Asia marginally higher today, but in fact, the gauge is headed for its best first full week of trading since 2023. And yes, all eyes are on the tariff rulings as it can provide a tailwind for the exporters in our region. And hence, you're seeing that exporter heavy Japan's Nikkei 225 up more than 1.5% here. And that is also supported by a weak yen and also a strong earnings from fast retailing. Now, we also want to flip the board and take a look at what's going on in the Chinese key economic data, as we just saw that actually not a bad set of data. You saw that CPI numbers, a bit of a rebound driven by food costs, but PPI numbers here down 1.9% year over year is actually better than the estimate of 2% decline. And that's also being driven by the anti-involution efforts. And sticking with China, I want to highlight a key listing today here in Hong Kong is Minimax. As you flip the board and take a look at how it's doing on its first day of debut, the stock is up here more than 70%. And it's actually one of the biggest Gen AI startups in China. And it's backed by Alibaba as well. And actually, we saw that Alibaba shares jumping today, leading gains in the region after China planned to approve some of these imports from NVIDIA in terms of the H200 chips. Back to you, Lizzie.
Winnie, thank you so much. Happy Friday. Have a great weekend. So let's also get to the top corporate news of the morning. Rio Tinto shares falling in Sydney as it resumes talks to buy Glencore in a deal which would create the world's biggest mining company. We can bring in our metals and mining reporter Martin Ritchie now. Martin, if this deal makes so much sense, why hasn't it happened sooner? What's the hurdle, the big hurdles remaining?
Yes, another mega merger in mining. This one, if it went ahead, would combine two companies with a total market cap of more than $200 billion. So it's a big deal. It would be the biggest mining deal ever. Look, these two companies had talks back in 2024 about combining. And that didn't go ahead for various reasons. There's been a lot of deal-making activity in copper since then, though, and I think there's a sort of eagerness to try and see if it can go over the line. The complicating factors here, there's a few of them, but the main one that people point to is about coal. Glencore is one of the world's biggest coal producers. But Rio, on the other hand, has actually exited the fossil fuel in recent years. So they might have to come to an arrangement where, for example, the coal assets are sold before any merger, or they're put into some other structure post-merger. That's one of the complications. Another one is just kind of cultural. The two companies are seen as having a very different style of management and execution over the years. Whether that's true now or not, I'm not sure. And also, Rio Tinto has a dual listing structure between Australia and the UK, which again may make the structuring a deal somewhat difficult.
OK, so potentially a strange marriage of cultures and assets, Martin. We've also talked a lot this week about mining in the context of tariffs and geopolitics, of course. Copper hit record highs past $13,000. It's below that level now. But would this deal even be on the table without President Trump?
I think that the deal, obviously the record high copper prices offers a sort of a very appropriate backdrop for the deal. But I think it's something that would still be going ahead. Well, who knows? But I would say it would still be going ahead regardless of where prices have gone over the past month. The miners have been, trying to put deals together on copper for many, many years now. And you've seen a flurry of transactions over the past year. You've seen the most high-profile ones being Anglo combining with Teck and BHP also trying to make deals. They want copper because of its demand profile over the next 10 to 20 years and the prospect of relatively high prices for a long time to come. The fact that prices are high right at this moment adds some extra flavour, urgency, but I think it was something that they'd be looking to do anyway.
All right, Martin, great stuff. Thank you so much, Martin Ritchie there, Bloomberg's metals and mining reporter. And if we just check in on the commodity space as things stand, as I say, copper is actually below that 13k a tonne mark at the moment. It had surpassed it for the first time earlier in the week. It is up 1% though. We have gold on the back foot too, down 0.2%. Traders really waiting for that US jobs data for clues on the Fed's path ahead. And we have oil extending its gains as traders focus on the Iran risks and Venezuela. We'll dive into both of those later in the programme, but Brent there at $62 a barrel. Well, coming up on Daybreak Europe, it's a big day for the future of Donald Trump's tariff policies. We'll wait to hear from the Supreme Court, and we'll be speaking to Origin Advocacy Principal Halie Craig next. Plus, later on in the show, we'll be discussing the markets and what we can expect from that jobs data with RBC Wealth Management's Frédérique. That's coming up at 6:45 a.m. UK. So don't miss those conversations. Stay with us. This is Bloomberg. Good morning.
I'm very confident that we have a very, very good chance. I mean, the law's on our side. The law is on our side here. So let's win that. Now, if we don't win, there's the whole alphabet number soup of things we've got.
Would you consider resigning if the case is lost?
Oh, of course not. That's silly.
That was White House trade advisor Peter Navarro speaking to Michelle Hussein ahead of the Supreme Court ruling on the legality of some of Donald Trump's tariffs. And you can listen to that full conversation by searching for the Michelle Hussein Show wherever you get your podcasts. Well, that ruling could come as soon as today. It's a decision which could undermine President Trump's economic vision and be the biggest legal blow of his second term. I'm pleased to say joining me now from Washington is Halie Craig, former US Senate trade advisor and now principal at government affairs firm Origin Advocacy. Morning to you, Halie, or should I say good evening. Thanks for staying up late for us. Do you expect the court to deem Trump's Liberation Day tariffs unlawful?
That is the consensus, I think, among the vast majority of trade attorneys and anyone that's been following this case. I think it's important to note that this case hinges on tariffs under one specific statute. That's called the International Emergency Economic Powers Act. And that is a statute that is not a trade law, and it has never been used to impose tariffs in the past. It actually sits under Title 50 of U.S. Code, which is war and national defense. All the other tariffs that the administration has used in the past are actually within the trade code. And so the word tariff doesn't even appear in this statute. It's primarily been used under, it is a national emergency's power, and it's primarily been used to sanction hostile actors, whether that be states or individuals. So this is actually a very novel use of the statute, which is why it's unsurprising that there have been over 700 challenges filed to these tariffs, which cover approximately $1.6 trillion in U.S. imports since they apply to almost every country on Earth.
So, Halie, we're here in Europe. If these IEEPA tariffs are deemed unlawful, would you expect the countries that were on the receiving end of them to honour their commitments still, or do you expect to queue round the corner to get back to the negotiating table and rehash all of these trade deals?
That's a really interesting question in terms of one of the domino effects we're going to see come out of this decision should those tariffs be struck down, because these deals basically on the U.S. side codify a tariff rate lower than the reciprocal rate that was announced on April 2nd, but they still codify tariffs that are only enforceable if IEEPA is allowed to be used for that purpose. And so it's going to be interesting to see how the EU reacts, how the UK reacts, if the leverage of the 10% tariff for the UK and the 15% tariff rate for the EU kind of goes away. What does the United States do next? And I think you kind of heard Mr. Navarro allude to it in the clip you just played. The White House does have other options when it comes to tariff authorities. They just aren't as potentially broad as IEEPA. And so I think what you would see, my guess would be a reversion to using steel and aluminum, copper, other types of tariffs as leverage.
And how long do you think it would be before Plan B takes effect? Because Valerie Teitel, our reporter earlier, was alluding to the opportunity that window would create when it comes to corporate margins and profits.
Yeah, I mean, I think if I were the White House, I would have a plan. I know they already have a Plan B in place. They've said that publicly. It's just a matter of what that looks like. There is a provision in trade law that has not been used yet called Section 122 that can be put in place pretty much immediately for 150 days for a ring around the collar style 15% tariff. So that could be an interim kind of holding position for the White House while they do the necessary investigations to ramp up, let's say, Section 232 or Section 301 tariffs. And so I think that's a great graph to show here. 122 would be a pretty novel thing to see. It has not been used in a very long time. Section 338 also has some guardrails on it, which I think is why the administration has so far relied more on 232s and 301s. Section 201s, of course, require investigations from an independent agency, so that's a little bit outside the scope here. But I would not be surprised to see a reaction very quickly from the White House in order to kind of stop the gap, right, in terms of the tariff rate that's being applied pretty much globally, even though it varies by country.
But surely, if these tariffs are deemed illegal, it's going to be an absolute customs nightmare. Is Congress going to have to pass legislation in order to process the refunds?
Yeah, I think that's another really great open question. And the logistics of getting a refunder can also be really difficult depending on who the importer of record is. In a lot of cases, it's freight forwarders that are paying the tariff up front and then forwarding on the bill to the end customer, the importer within the United States. And so there's also a question of how do these intermediaries get refunded versus, the final importer of record, the consumer that actually purchased the item. And it's just going to be a logistical nightmare. I mean, the tariff code has been amended 50 times in the past year in 2025, and half of those amendments were due to IEEPA. So there have been a lot of tweaks along the way in 2025. There have been on the water exemptions. There have been changes for countries. There have been sectoral specific rules in place. And so sorting through that web is going to be really, really difficult, especially with, government level software. And so there's been interest in Congress for a while on customs modernization, making it easier for importers to get refunds, for example, when they re-export a product. That's called duty drawback. And so I could see the Supreme Court kind of kicking that question to Congress, since it does deal essentially with the refund of taxes, which tariffs are.
Okay, really good to get your insights. Halie Craig there, former US Senate trade advisor and principal at Origin Advocacy. We thank you so much. Well, if we look at the odds on this decision, as Halie says, it's looking likely not to go in Trump's favour. Kalshi, the platform, has bettors seeing around a 28% probability of a ruling in favour of Trump's tariffs, only 28%. But at the same time, they assign only about a 40% chance that the court would order the government to immediately return tariff revenue. So, of course, as Halie says, focus will then turn onto what happens next after the ruling. So that could come as soon as 3 p.m. London time. But coming up right here on Daybreak Europe, tensions rise in Minneapolis as local and federal authorities clash over an investigation into the shooting of a woman by ICE agents. We'll get into the detail next. This is Bloomberg.
I've seen presidents come and go, and I've seen them age and change, and it's past my bedtime.
What will you do next? I mean, there's always rumors. Do you think about what you do next, or you're focused more in the here and now?
I'm here and now, but the truth of the matter is that I've always taken risk. I've never sort of secured my position to make sure that the pension was there and that the comfort was guaranteed and that I was on an unlimited term. No, it's sometimes you just have to jump.
Christine Lagarde dismissing a return to French politics there. And you can watch the full interview with the ECB president on Leaders with Francine Lacqua. That's today at 5:30 p.m. in the UK on Bloomberg TV. And it's also available now on the Bloomberg website and on the terminal. Now, to some other stories we're watching this morning. Protests in Iran escalated significantly overnight amid an internet blackout. Thousands appeared to have taken to the streets across the country, including in the capital, Tehran. The unrest is emerging as the most serious threat to Iran's supreme leader since a 2022 nationwide uprising. Meanwhile, in a Fox News interview, US President Donald Trump issued a warning to Iran.
But I have put Iran on notice that if they start shooting at them, these people are totally unarmed people. And they love their country. They want something to happen. Look at their country. They've gone back 150 years. But I've told them that if they do anything bad to these people, we're going to hit them very hard.
The investigation into the killing of a US citizen by a federal immigration officer is being complicated by clashes between federal and local officials. The FBI has taken control over the objections of the governor, Tim Walz. State authorities have questioned whether a federal probe could be trusted, especially given comments by the Trump administration's officials that seem to exonerate the officer. The case has sparked protests in Minnesota. And Trump administration officials have reportedly discussed sending payments of up to $100,000 to Greenland residents. Reuters reports that the payments would be part of an effort to convince Greenland to secede from Denmark and join the US. President Trump has repeatedly underscored Greenland's strategic importance as vital to US interests in the Arctic. And mortgage bonds and US homelender stocks rallying in after-hours trade. That's after the president directed Fannie Mae and Freddie Mac to purchase a $200 billion amount of the securities to push down home loan rates. It's Trump's latest effort to bring down housing costs ahead of the November midterm elections. Well, those are some of our stories that we're watching around the world this morning, and we'll dive into the geopolitics next. US action in Venezuela concerns and Greenland and NATO. So many geopolitical themes this week, but how seriously should we take Trump's threats? We'll be discussing all of them next with our guest. This is Bloomberg. Live from London, this is Bloomberg Daybreak Europe. I'm Lizzie Burden with your top stories. Stocks drift as markets brace for the US payrolls report and a possible Supreme Court ruling crucial to President Trump's tariff policy. Meanwhile, Rio Tinto and Glencore get back to the coalface, resuming talks to create what could become the world's biggest mining company. Plus, Donald Trump signals the US military could strike drug cartels on Venezuelan territory, as he also looks to firm his grip on the country's oil industry. A very good morning if you're just joining us. It's 6:30 a.m. here in London and the market looks like this. We are on tenterhooks for that jobs report and maybe the tariff ruling from the US Supreme Court. Futures flat stateside and pointing higher here in Europe, and the 10-year Treasury yield there at 4.17. But that could change. Could we get Treasuries out of the narrow range that they've been trading in with these two risk events later on today? On the front pages this morning, we kick off with the Wall Street Journal. They have the Minnesota law enforcement officials saying that the FBI's blocked them from taking part in an investigation into that fatal shooting of a woman by an ICE agent. So they're quoting the Vice President J.D. Vance, describing that woman as a victim of left-wing ideology. Flip over and we can look at the Financial Times. This morning they're leading on the UK Prime Minister Keir Starmer and his plan to exclude the City of London from his push for closer alignment with Brussels post-Brexit. So we keep an eye on that story. And then we turn to the Times. They're splashing on Britain's most senior military chief, warning that Starmer needs to spend even more on defence to the tune of £28 billion. So that call on the heels of President Trump's demand that an extra $500 billion be spent annually on US defence. But you can get a roundup of all the stories you need to know to get your day going on today's edition of Daybreak, which Bloomberg Terminal subscribers, of course, can find by going to DAYB Go. Well, President Donald Trump says that the US military is preparing for strikes against drug cartel facilities in Venezuela, and his comments on Fox News come just days after the capture of President Nicolas Maduro. They'd also mark a significant escalation in that region.
We've knocked out 97% of the drugs coming in by water, and we are going to start now hitting land with regard to the cartels.
For more on this, we're joined by Bloomberg's Rosalind Matheson. Ros, good morning. How worried should regional leaders be? And could this come to pass as the Senate voted to limit the White House's use of military force?
Well, as we heard, Donald Trump is again floating the idea of targeting drug production facilities on land. They've obviously been hitting boats already. And it's not just Venezuela where he's talked about that potentially happening, but also places like Colombia and Mexico. And it's interesting to hear him raise that again, because he just had a pretty okay phone call with the president of Colombia, Gustavo Petro, where he praised Petro for his tone. The two men agreed on a plan to meet. But this is part of how Donald Trump operates. He likes to keep everybody on their toes. He likes to keep things on the table, even if he doesn't end up following through. So it's very much in the realm of how he operates. And equally, you mentioned the Senate and this rebuke that came through. That's a procedural thing, so it's unlikely to get through Congress. Even if it did, Donald Trump would probably veto it. But what we saw was a small group of the more isolationist Republicans cross party lines to support Democrats to say, hang on, we're kind of sick and tired of Donald Trump bypassing Congress. Essentially, what he's doing is enacting a lot of his policy agenda, foreign policy agenda, including on trade as well, without really consulting or going through Congress. And they're saying they want to rebuke him on that. But most Republicans are falling into line on his actions in Venezuela. And even if they're uneasy about how he's treating Congress, they're probably not keen to stick their necks out and say so publicly. So this is an interesting rare rebuke, but it's not really representing Republicans as a whole.
OK, Ros, thank you so much. That's Bloomberg's Ros Matheson there. Well, the US action in Venezuela and the escalating rhetoric around Greenland is raising concerns for NATO. Our next guest says Denmark and Europe should be very concerned about Trump's fixation on Greenland in particular, warning it's less about conventional geopolitics and more about what he calls ego politics. Well, I'm pleased to welcome Klaus Dodds, geopolitical writer and interim faculty dean for science and technology at Middlesex University. Good morning to you, Klaus. Thank you so much for making time for us. What does the US really want from Greenland? Let's start there.
Good morning. I think Donald Trump undoubtedly wants Greenland, partly because, as I've said recently, I think this is as much about ego politics as it is geopolitics. He wants to be the president who made America great again, and I think part of this is finishing the job off that James Monroe started 200 years ago, which is ensuring that America is genuinely dominant in the Western Hemisphere. Beyond that, I think there's some concerns about Greenland's mineral resource potential. And I think Trump has mentioned a number of times that he's not going to tolerate China having a foothold in Greenland, and has also expressed concerns about Russian and Chinese vessels operating close to Greenland's shorelands. So I think we should take this very seriously, in short.
But if Denmark were to spend more on security, would any amount satisfy Trump?
No amount would satisfy Trump. That's the point. Denmark, I'm afraid, cannot do anything to satisfy Donald Trump. This is my point about ego politics. Since 1951, there's been a defense agreement between the United States and Denmark. It gives the United States huge latitude to revisit the security relationship with Greenland and Denmark if it wanted to, but it doesn't want to. It wants Greenland to call its own. So this is really about using money and bluster, I suspect, to get what Trump wants.
And if the US moved on Greenland, Klaus, could NATO do anything to stop it?
NATO's not going to do anything. I mean, this is the grim reality to all of this. If, for example, the US genuinely thought military action was the way to go, that's the end of NATO. You can't violate the territorial integrity of a fellow ally and NATO member state and expect NATO to survive. I don't think that's likely. What is far more likely is that money will be thrown at this. And even if the US throws $5 or $6 billion at some kind of purchasing agreement, it would then have to, on the basis of that going ahead, ensure that Greenland was genuinely independent of Denmark to make such a thing happen. But I just note that in the end, I think Trump is going to use money as the primary lever because, after all, Denmark's already faced threats of tariffs and trade barriers in the recent past.
Well, yeah, if Greenland were taken, what would you expect governance to look like?
I think the most likely outcome, if, and it's a huge if Greenland was to become independent of Denmark, if Greenland was to enter into some kind of free association agreement that the United States has, by the way, with Pacific island territories, then what you could find is an arrangement where the United States would take responsibility for defense and security matters and foreign policy issues, but Greenland would be allowed a degree of autonomy in a way that, for example, would mirror what Greenland currently has within the Kingdom of Denmark. So what the United States, I suspect, is going to offer directly to the people of Greenland is, here's $5 or $6 billion to ease the way for you to say yes. And what we're asking you is to transfer your allegiance, your relations, your formal relationships from a very small European state to a huge superpower that, for example, spends $900 billion on its defense, and it's prepared to throw $5 or $6 billion to purchase or to take over Greenland. That's really the scale of what we're talking about. Denmark offers 500 million euros a year in the form of a block grant. Denmark can't match the spending and military power of the United States. It's really that simple.
And of course, we know that President Trump wants to spend an extra $500 billion a year on defence, this demand this week. So when you take that and wonder how he would want to spend it, together with how we started the week, the Venezuelan operation, would you say that the US is moving towards an imperial foreign policy?
Well, last year I wrote about Trump as the imperial president par excellence. I've also just recently written that he wants to be a hemispheric president. This is a man with insatiable ambition, somebody who likes maps and has a very keen interest, I think, in expanding the territorial and resource footprint of the United States. I genuinely think Trump is, in essence, in agreement with Putin that the world is changing and it's moving increasingly to a world where great powers have their spheres of influence and domination, and everybody else just has to fall in line. It's really quite a sort of pivotal moment, you might say, in global geopolitics.
OK, excellent to talk to you this morning. Klaus, Dodds, geopolitical writer and interim faculty dean for science and technology at Middlesex University. Thank you so much and good morning to you. Well, as we head towards the market open here in Europe, we are looking at shares of Glencore rising on Tradegate. This, of course, on the news that Rio Tinto's in talks to buy Glencore. It would create the world's biggest mining company. They'd have a combined market value of more than $200 billion. And this, of course, just a bit over a year after the earlier talks between the two companies collapsed. So we'll be monitoring the developments into February, when is the deadline for that deal. But coming up, we'll look at what we can expect from the jobs data later and the potential market reaction with RBC Wealth Management's Frédérique. That conversation next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now to our top corporate stories. General Motors is taking a fresh $6 billion hit as it scales back EV and battery production. That brings total EV-related write-downs to $7.6 billion. A new regulatory filing shows the company's recording all of these charges in its fourth quarter results. And Bloomberg understands CK Hutchison has picked Goldman Sachs and UBS to work on the planned IPO of global health and beauty retailer A.S. Watson Group. The conglomerate, parent of Superdrug in the UK, among other brands, is said to be seeking a dual share sale in Hong Kong as well as London. Bloomberg has previously reported that that listing might happen this year and raise $2 billion or more. And elsewhere, here in the UK, a prominent group of lawmakers from the House of Lords has criticised the Treasury for its limited grasp of the risks related to the boom in private capital markets. The Financial Services Regulation Committee also says that the Bank of England needs to move faster in its plans for stress testing the sector as a matter of urgency. Well, those are some of our top corporate stories this morning, but turning to the macro, because today plenty of eyes will be on that release of the all-important US jobs data and a potential Supreme Court ruling on President Donald Trump's tariffs. Joining me now, I'm pleased to say, is Frédérique, Head of Investment Strategy for RBC Wealth Management in the British Isles and Asia. Good morning to you, Frédérique. Good to see you again. What are you expecting in the jobs data later? Let's start there. How weak a reading would you need to see to expect a Fed cut this month?
It would have to be very weak indeed, but we expect 70,000 new jobs created this month, and we'll be looking at the source of these jobs. Where are they coming from? The trend over the last few months has been it's very much structural job creation, so healthcare, social care, things linked to the longevity of the population. And we'll also be looking at the retail sector. That for us is the wild card. Historically, over the last 10 years, the retail sector generates about 14,000 new jobs in December for the holidays. This number might be much lower this time around, given the unwinding of the front running of the tariff purchases and also much slower immigration. So where does these new jobs come from? Structural or cyclical? We think mostly structural still, and this retail wildcard.
So Stephen Myron, the Fed governor, of course, told us yesterday he wants 150 basis points of cuts this year to support the labour market. I think traders are pricing at least 2 quarter-point cuts, so significantly less than he would like. What's your outlook for the number of cuts we'll get this year?
So we think 1, maybe 2 over the course of this year, probably later than now. And certainly the market does not expect a rate cut at the next Fed meeting. It seems to us that the overall economy inflation outlook really do not warrant a much more aggressive cost-cutting policy than that.
It's interesting because we have Goldman warning that the valuations could really be exposed in the equity market if you get a downturn in the second half of the year in the US. Is that not something that you're worried about?
Well, its valuations are stretched in most developed markets. In the US, more, even if you take out the very highly valued Max 7. So valuation levels are something we spend a lot of time thinking about. However, they're not a market timing strategy. So long as rates are stable-ish, so long as corporate earnings keep on delivering, we think that these valuation levels can be sustained. But yes, if something happens to the economy, if there is a big wobble in terms of the outlook for economic growth, if the AI story starts to unravel, both in terms of capital outlays or the lack of evidence of productivity returns on these investments, if investors lose faith in the health of earnings growth this year and next, then there could be an adjustment in markets. And so we tell our investors to be mindful of this, to be market weight against their appropriate benchmark, but to be prepared to be defensive if that situation arises.
OK, well, if we can look also to the other major risk event on the horizon for today, Frédérique, of course, that is the potential Supreme Court ruling on Trump's tariffs. If the Supreme Court deems the IEEPA tariffs unlawful, how worried would you be about the US deficit, given he still needs to pay for his tax cuts and maybe this defence spending as well?
He does need the money, and we think that the White House is already working at trying to replace these tariffs. We think that replacing one for one will be very difficult. We think the White House is going to make it very difficult also for corporates to get any kind of rebate for the tariffs they may have already paid. But overall, for us, it's mostly about the flexibility. The current setup gives a lot of flexibility to the White House in terms of dialing up or down pressure on countries. Any replacing tariffs would be a lot less flexible for the White House, so less of an effective tool for them. But overall, for the fiscal deficit, if the current tariffs are replaced, we think there will be a small loss of federal revenue. Not enough to really change the issuing schedule in our mind. So just a slight increase in the deficit.
Just finally, Frédérique, what would be the dollar reaction to the threat we were discussing in our last conversation if President Donald Trump were to attack Greenland?
So, look, we think that the overall tendency for the US dollar is slight weakness. We think that central banks will continue to want to diversify. The US is proving to be a less reliable actor than it's been in the past. And so we think that this pressure that we've seen last year, sometimes it's more intense than others, but we think that the dollar will weaken, will not be entirely replaced as a reserve currency, but is likely to weaken in the long term.
OK, Frédérique, always a pleasure to speak to you. Frédérique Halie there, Head of Investment Strategy for RBC Wealth Management in the British Isles and Asia. Well, switching to tech news now, TSMC's revenue has topped estimates, reinforcing hopes of sustained global AI spending in 2026, despite the concerns we were just discussing about an industry bubble. The go-to chipmaker for NVIDIA reported a roughly 20% rise in December quarter revenue, based on calculations from monthly figures. And a reminder that later on this morning, Bloomberg Tech Europe takes a deep dive into how AI is shaking up the music industry. That episode featuring an exclusive interview with Grammy-winning artist will.i.am, who's all in on artificial intelligence.
It's a renaissance. The same way the Renaissance, catapulted, dimensionalized the creative industry in the past. The Renaissance, this new Renaissance, to do it for this era that we're in. So it's the age of the hyper creative.
Catch that conversation at 8:30 a.m. UK time here on Bloomberg TV. But we've got plenty more to come on Daybreak Europe, so stay right there. This is Bloomberg.
We're still four candidates. It's the president's decision. One of the candidates has not been interviewed yet.
Who's that?
Rick Reeder. I think he manages several $1 trillion at BlackRock. He is only person with no previous Fed experience.
Is that a plus?
For the president to decide.
And Waller is the fourth?
Chris Waller, who's sitting Fed governor, is the fourth.
Time frame still the same?
I would expect president's going to Davos, I think, in 2 weeks. So I don't know whether it'll be right before or right after that, but I think in January.
Four names still in the running: Rick Reeder, Chris Waller and the Kevins. And you can see here the Polymarket odds putting yellow Kevin Walsh in the lead here at the moment. So the race is still open for the Fed chair. And it looks like, according to Bessent, there will get a name either just before or just after Davos. So inclusion in January. But look, the Fed is expected by markets to cut rates 2 times this year. The jobs data today, of course, will play a crucial role in deciding that Fed path ahead. Hopefully this is clearer data than we've been getting. It's the last print for 2025. And when it comes to the non-farm payrolls number, the expectation among economists is 70k, the whisper number 65. Could this be the report that wakes up the Treasury market? Flip the board over one more time. We've also got the tariff ruling maybe coming from the Supreme Court later on today. Could this be what wakes up the bond vigilantes? We're down here sticking at a narrow range compared to what the range Treasury yields have been in. Could we break out of that range because of the jobs report or because of the tariff ruling? These are the two big risk events that are on the horizon today. Let's show you what else we've got coming up later on today. We've also got here in Europe the German industrial production numbers. So that's at the top of the hour in just a few minutes' time. But as I say, also at 1:30 p.m. London time, the jobs report, and from 3 p.m. potentially a ruling from the Supreme Court, because it is an opinion day for them. They'll dive into all of that on the opening trade. Anna, Guy and Tom are up next. They'll take you all the way to the market open. But see you back here on Monday on Bloomberg Daybreak Europe. Good morning and happy Friday.